Technical analysis is a methodology used to analyze financial markets by evaluating past market data, primarily price and volume. This type of analysis is based on the belief that historical market trends and patterns can provide valuable insights into future price movements. Technical analysts use various charts, tools, and indicators to identify market trends and predict future price movements. Technical analysis differs from fundamental analysis, which is another popular method of analyzing financial markets. Fundamental analysis involves examining a company's financial and economic data to determine the intrinsic value of the company and the potential for future growth. This analysis involves reviewing financial statements, news releases, and economic indicators to assess the underlying strength of the company. One of the key differences between technical and fundamental analysis is the focus of each approach. While technical analysis focuses on the past price movements and patterns, fundamental analysis focuses on the underlying economic and financial factors that affect a company's performance. Another difference between the two approaches is the type of information used. Technical analysis primarily relies on historical market data, such as price and volume, to identify patterns and trends. In contrast, fundamental analysis relies on company-specific data, such as earnings reports and balance sheets, to assess the intrinsic value of the company. Despite these differences, both technical and fundamental analysis can provide valuable insights for investors and traders. Many market participants use a combination of both approaches to make informed investment decisions.